Hello out there to all the people. Thank you for coming back to join us on the weekly podcast of CPO Trading in Busan, Malaysia. And this is Dawong here speaking on behalf of Oriental Pacific Futures, or in short we call it the OPF, based in Kuala Lumpur of Malaysia. Alright, this week on the weekly podcast we'll cover on the July contract of crude palm oil futures, and the date will be moving into the 5th of May up to the 9th of May. All right, we are coming to the second week of May in the year 2014. And looking from this day chart alone, all right, let's start off with the day chart. On last Friday, July contract closed at a price of 2591. All right, 2591, and you can see on this yellow highlighted text. All right, and where we are going to move from here, stay tuned with us for the next couple of minutes. All right, first of all, let us, as usual, put in with some indicator EMA for 20 and 200. All right, from the chart illustration, we see that there is a hovering on EMA 200. All right, with a gap created last week where market fell off from 2614. All right, 2614. Whenever I put up a cursor on the y-axis price list, you can actually read on this index here to find the price level. All right, just like this, 2614. And how the market is going to move on this week will depend a lot on the fundamental news as well as the market supply and demand. All right, EMA 4 and 20 has been crossing down on last week. All right, last week which dated on the 29th of April. That was last Tuesday. All right, when we put a cursor here specifically, you can actually look at the date and the open, high, low, close, which was illustrated here. All right, you see 29 April, and the market actually did a crossing in the EMA 4 and 20. All right, from this week onwards, basically we are forecasting the price to be pretty weak, but the market may be pulling up to cover the gap at 2620 or 2630 before it comes down. And from the day chart, let us move into weekly chart, and I want to show all of you a very, very interesting outlook of the market. All right, looking at this. All right, looking at this, let us highlight the line. All right, highlight the line, and you could have actually see that the EMA 4 and 20 has been crossing down on last week Friday as per market close. All right, where after I highlighted the three lines, all right, EMA 4 is indicated by the green line, and EMA 20 average line is indicated by the blue line, whereas the purple line indicates the EMA 200. Alright, from this weekly chart alone, we actually have seen a triple crossing of these three EMA averaging lines, and the market happened to close lower on the weekly bar at 2591 on last Friday, and that was the 2nd of May year 2014. Alright, so this week there's a very, very high tendency of the market dropping down and moving into very bearish sentiment. All right, but a possibility also may happen in the early part of the week, which the market may pull up to 2620 or 2630 before it comes down. So be very cautious on this pull up. But once the market starts to come down and go below last Friday low, all right, which was in the region of 2560, all right, 2560, then perhaps you're going to see another big downfall in the black weekly bar. In this case, it is red color. All right, so that is on the weekly chart outlook, and let us move into hourly chart outlook. All right, 60-minute, and what we're gonna see here, basically, as we have seen on the 60-minute, okay, the market tried to protrude 3 times above the EMA 200. In fact, 4 times, 1, 2, 3, and 4, and the market is most likely going to move down this week after the market possibly pull up on a 50% correction. All right, let's change the color to black in order to be more visible. All right, so this week our market pull up as what is shown here on the hourly chart. All right, first resistance is 2600, which is 2,600 ringgit per ton, and the 50% correction will be somewhere around here, 2620, and that actually coincides very, very, very beautifully with what we have predicted on the day chart gap as well as the weekly chart. Alright, last but not least, let us do another interesting outlook by drawing a trend line down here. All right, let me delete this and let's draw a trend line from the top to bottom down. All right, change the color to black and duplicate it, parallel line. All right, increase the width so it is a little bit more visible, and let's put it down here. So as you can see from the channel that has just begun to form, if the market happens to pull up to 2620 or 30 and start to move down on this coming week, and perhaps over the next couple of weeks, 2 to 3 weeks time, market has got very high chance to come back down to the region of 2,440 or even lower, because as the market moves down, all right, this channel line also will goes down lower in the prices. So exactly how low will the market go? Let us give a little bit of estimation from this previous uptrend. All right, previous uptrend as usual. Let's put it to black color to be more visible. And well, if the market comes down, then perhaps after the 66%, yes, the first support should be lying at 2477 in the region of 2470, or even it may come back down to a double bottom at 2,250. But no one is very sure whether if this is going to happen, and that all depends in the better sentiment that will happen in the next couple of weeks, like 2 or 3 or 4 weeks from now. But this week, we are prone to see a drop, all right, after midweek, and the market is most likely going to move in sentiment, in bearish sentiment. All right, so trade well and control your risk. And this is Dawong here. I wish all of you is able to trade profitably and make more money for the market. And not forgetting to come back here every weekend and look at our weekly videocast on FCPO. So on behalf of Oriental Pacific Futures again, I wish all of you trade well and have a good week ahead. Thank you very much and do come back. Bye bye.